All right, perfect. Can somebody confirm if you can see my screen, please?
I can
Yes,
see
we
it.
can.
Okay, perfect. All right. And there's two more people in the lobby. And they are in now. Okay, perfect. Well, first of all, for starters, I want to thank everybody for joining today's presentation. I know I booked it for 45 minutes. However, this should be relatively quick presentation, about 35 minutes. And then I'll open the floor up for Q&A at the end. So just wanted to thank everybody for coming out. Today's topic, right, is pretty much just going over tax tips for realtors, right? I understand I've been working now with a couple of realtors over the last couple of weeks, and I've been noticing common issues and problems and things that I feel like as a CPA I can help out with. So I thought it'd be a great idea to host a presentation this week and next week for realtors. So today I'll just be providing some tax tips. So for those of you who don't know me, my name is Darion Wiggs. I am the CEO and founder of Wiggs CPA Tax and Accounting. I am a licensed certified public accountant. I launched my firm in October 20th of 2022. So although we're only a couple months old, I spent about a year working on my business plan so I can essentially be in the best position today to help you all out as much as possible. So as far as education, I did graduate from the University of Illinois at Urbana-Champaign, where I got my bachelor's degree and then went on to get my master's degree in accountancy, and also had a concentration in real estate. So it's something that'd be very beneficial to us moving forward. And as far as work experience, I was an auditor prior to starting my own firm. I worked at Ernst & Young. EY is known to be the third largest accounting firm in the world. I started off there and thought I found my dream job, and then quickly realized that that's not what I wanted to do long term. I quickly realized that I was very passionate about teaching and giving back to my community. So after brainstorming and going through a midlife crisis at 23, I tried to figure out what I wanted to do in the long run. That essentially came down to teaching. And I quickly noticed after talking to mentors and getting to know people that being in the classroom, the traditional classroom setting, isn't the only way to teach. So that's why I'm here today. I plan on doing a bunch of webinars for different topics throughout the year to kind of give it as much financial literacy topics as I can. But that's kind of where I come. I'm super passionate about teaching. Like I said, I got an auditor background, and I'm also have some tax experience too. I do tax services, where I got to work with all the high net worth clients. And then that's when I decided that it was time to start my own firm. So that's a little bit about me. But I want to quickly now, let's get into what we all came here to talk about, right? So the agenda today is the first, we'll be going over the independent contractor taxes, because most realtors, you get a 1099. So in the eyes of the government, you're considered a business owner, and you're also independent contractor, right? So I'm going to go over the difference between being taxed as a W-2 employee, and then some basics to how you're taxed as an independent contractor. And then we're going to go over business entity formation, right? I'm not only going to teach you how to save money on taxes, but I also want to teach you all how to protect your wealth. And then we'll go about tax deductions, best practices, and then essentially go into why you should hire a CPA, or better yet, why you should just have a qualified tax professional on your team. So to give you all a quick high-level overview, right? So whenever you think about taxes, I know a lot of people hear taxes and we think about it in a negative way, but I all want you to think about taxes now, especially as realtors, and think of it in sense of having a mindset change, right? Whenever you think about taxes, I want you to all to think about the fact that the tax code was created for business owners, right? It wasn't created for W-2 employees. It was essentially created for business owners. So those of you who get a 1099, so all of you as realtors, and anybody that's investors, right? So now that we know that the tax code is created for business owners and investors, I want to teach you all essentially throughout this presentation how we can essentially use the tax code so that we can legally live tax-free, right? We want to make our entire life a tax deduction, essentially, right? Because the truth is, as taxpayers, all of us, regardless if you're a realtor or not, we all pay at least 25 to 40% of our income in taxes, right? I don't know about you, but that's a huge percentage of your hard-earned money going to something that you probably didn't even sign up for. So I want to teach you all how to save on money in terms of taxes. And I also want to go into some of the major tax changes, because as business owners, right, as independent contractors, as realtors, it's important for us to stay up to date with what's going on in the industry. Because as we all know, during the pandemic, the prices of homes, and I'm pretty sure your industry was heavily influenced by what was going on with the economy. And it's the same thing with taxes. So one quick thing I want to elaborate on, if you all haven't heard, the Inflation Reduction Act, which was passed in August of last year, right? Most people hear the Inflation Reduction Act and instantly just think about inflation. That's what it was for. However, one thing I want to put emphasis on right now throughout this presentation, that part of that Inflation Reduction Act meant that the IRS plans on hiring 87,000 IRS agents over the next 10 years, right? Now, when I hear that, I instantly like, ooh, that's a lot of people. But if you think about it, right, the IRS spent a lot of money. The government spent a lot of money throughout the pandemic. So now the government is trying to figure out how to get some of that money back. And one way they're doing it is hiring more tax enforcement agents, right? And they're not coming for W-2 employees. They pay taxes every 2 weeks. That's a straightforward process, right? They're coming for us, right? They're coming for me. They're coming for you as realtors, you as independent contractors, right? So since we know that the IRS is coming for us, right, doing more audits, right, making sure we got our bookkeeping in place, making sure we're reporting our income. Now that we know that the IRS is coming for us over the next 10 years, I want to essentially reemphasize the fact that the tax code was created for us. I want to teach you all how to utilize the tax code, not only today, but every day moving forward to our benefit to help us save on money. So before I go into that, I understand there's at least 2 or 3 people here that's relatively new to being taxed as contractors. And for those of you too, that's business owners, right? I just want to re-emphasize, one of the biggest tax seekers, right? It's one of my favorite examples, right? In this scenario, right? You got a W-2 employee making $100,000 and you got a business owner making $100,000, right? Same amount of money, both taxed at 25% for this example, right? As a W-2 employee, right? You earn your money, you pay taxes right away. You get no say-so on your money. You earn, you pay taxes, and you get to spend what's left, right? No say-so on your tax liability. But as a business owner, the tax formula is slightly different, right? The tax code was created for us because now we get to earn our money, right? Earn the same amount, but then we get to spend our money and then we pay taxes on what's left. And what this basically means is the IRS allows you as an independent contractor, right, as a realtor, to write off any expense that is ordinary and necessary for you to complete your role, right? So the marketing ads, the staging costs, the gas driving back and forth, the professional dues, all of that, you get to take that into consideration and then you pay taxes. So in this situation, right, W-2 employee, or if this example, pays $25,000 in taxes, but you as a realtor, right, you get $100,000, the same amount, you spend money on everything you need to run your business and you pay taxes what's left. Your tax savings in this case is an instant $18,750 tax savings. So that's just kind of a quick example of how the tax code works for us. The government wants us to spend money to work on our business, right? To work on our brand. So just keep that in mind that the tax code was created for us. We just need to know how to utilize it, right? So we're not paying, too much in taxes over the next couple of years. So now that we know about the biggest tax secret, right? It's not always about making money if you can't keep it. So I want to quickly go over some examples of how we can protect our wealth and then save on taxes at the same time, right? So everybody in this room, as an independent contractor, as a realtor, even somebody in here who just wants to, start investing in real estate, right? Without a legal entity set up with the state of Illinois, you are considered a sole proprietor, right? This means that you don't have an LLC set up. So when you fill out the W-9s to give it to your broker or whoever's paying you, you put your social security number and not your EIN, right? Everybody starts off as a sole proprietor, right? And the reason why is easy to set up, right? It costs $0. Everybody starts here, and you can take business deductions as a sole proprietor. I want to make this very clear. You do not need an LLC, no matter what type of business you have, to take business deductions. So sole proprietors, you can do everything that an LLC person can do in terms of taking business deductions. However, if you are a sole proprietor, if you're a realtor as a sole proprietor, right, this is the biggest downfall, and I want you to pay attention here. You have no legal protection as a sole proprietor, right? So yes, you may have E&O insurance. You may have insurance covered by your broker too as well. But if something were to happen and you were at fault and your insurance doesn't cover those fees and those expenses, not only is your 1099, your business income at risk, right? Now your personal home, your personal savings, your personal car, even your kids' college, everything you own is at risk because you have not protected your entity because you are a sole proprietor. So that's the sole proprietor. Everybody starts there, right? And it's good in the beginning stages, right? But once you start making money, once you decide that, hey, I'm going to be a realtor full time, I'm going to be a real estate investor full time, that's when I recommend everybody here to form an LLC, right? Everybody probably heard of it now, right? It is a limited liability company. Relatively easy to set up. You register in the state of Illinois, you pay $150 and then a $75 annual fee, right? And I say you don't need to form an LLC to take tax deductions, right? You need to form an LLC to protect your wealth. And when I mean same scenario, now let's think about it, right? Somebody were to sue you and your insurance doesn't cover it, or it's a little bit more in your insurance. Now they can't take your personal home, your personal savings. They can only take what your business own, right? So now you got to keep everything separate, your business and your personal lifestyle. But the biggest thing when you think about an LLC is you form an LLC to protect your wealth, right? And on top of that, it enhances your credibility, right? It shows your customers, your clients, that you're serious about what you're doing, right? It helps with branding. And on top of that, it also helps you show credibility to banks, right? You go in there and show, hey, I got an LLC, I got a legit business going on here. It increases your chances of getting access to additional business credit and funding, right? Because now you're eligible with a business LLC for different grants, loans, and different incentives that are available to business owners. So just keep that in mind, right? You want to form an LLC to protect your wealth, enhance your credibility, and also get more access to funding. And then my favorite part is to capture significant tax savings, right? So I said you don't need to have a LLC to take tax deductions, right? You could take tax deductions without an LLC, but you need an LLC or just an entity in general to capture significant tax savings. And those significant tax savings come from when you convert your business to be taxed as an S-Corp. And I will elaborate on that soon. But in order for you to even qualify to be taxed like an S-Corp, you need to have a LLC set up at the bare minimum. So I will elaborate on that soon. But one important point I want to hit on this slide is the last thing at the bottom, which is having an LLC, right? Requires you to separate your personal and your business finances. And this is important because a lot of us pay money for LLCs. We get these entities set up, and then we forget the most important part, that if we pierce the corporate veil, then we lose all of our legal protection that we sign up. And what that means is, let's say this scenario, right? I got an LLC, but I have one bank account. I have one account. It's just my personal account. I have my business and my personal assets flowing to the same account. Now, if I were to get sued, the lawyer can come to me, the judge, or anybody trying to sue me and be like, hey, they coming for my business assets. But if your business assets and your personal assets are merged together, then you're piercing the corporate veil, right? You got all of your assets together, and there's no way to tell what's your business and what's your personal. So guess what? Now all of your personal assets are back at risk because you didn't separate your personal and your business bank account. Now, I know I said this is a requirement for LLC, but this is a requirement for everybody in here. Nobody in here should just have one account. Everybody in here at the bare minimum, right? At the bare minimum needs to have at least a business account and a personal account, because not only is that going to help ensure that you have a solid financial foundation for your business, right? It's also going to help you track the performance of your business. And the truth is, as a sole proprietor and the limited liability, if you got a single member LLC, right? The way you pay yourself is you literally transfer money from your business bank account to your personal account. You don't have to run payroll. You just need to transfer money. But a lot of us don't even have two separate accounts to do that process. So this is just a reminder that not only is this a requirement for LLC to have that limited liability, but everybody in here needs to have at least two bank accounts to separate business and personal at all times. So now I talked about that a little bit. I want to go over the significant tax saving portion just a little bit more for those of you with an S-Corp, right? And for those of you who are making money and you keep hearing about S-Corp, now I'm going to break it down a little bit more to why and when you need an S-Corp, right? So what is an S-Corp, right? An S-Corp is a tax election status. It's not a new entity. It's not a new completely separate business, right? My business is WIG, CPA, Tax and Accounting. It is an LLC, but it's taxed for tax purposes as an S-Corp. Same entity, same business, and it's the same thing for you, right? So it's a tax election status. You just fill out form 2553. You send that to the IRS, boom, process over, right? But when do you need an S-Corp, right? I keep hearing about it, right? But when do you need it? So you need an S-Corp when you're making somewhere between around $40,000 and $50,000 in net income. That's your revenue minus your expenses, right? You need to form it once you start making some money, right? Have some money, because the expenses to that are a little bit higher than usual, because now you need to pay yourself payroll. You need to pay yourself a reasonable salary. Now I'll elaborate on that soon. And also you file a separate tax return, which increases the tax fees, right? But why do you form it? It's because you get an instant tax savings of nearly 15.3%. Think about that. 15.3% tax savings instantly once you form an LLC. And this is why, sorry about that, once you elect to be taxed as the S-Corp. And this is why, right? As independent contractors, as realtors, right? Our responsibilities is to pay federal taxes, right? That's almost 20-some%. State taxes, 5% in Illinois, we're close to 37 now. And then an additional 15.3%, that's your FICA taxes, right? That's your Social Security and Medicare taxes. You as an independent contractor, you as a realtor, it's your responsibility to make these payments. But now I'm telling you, once you start making between 40 and 50,000, you can save 15.3% in taxes just by converting your business, right? So I'll elaborate on that a little later if you got questions, but the big rule of thumbs, the pros to forming an LLC, sorry about that, the pros to electing to be taxed as an S-Corp business, massive tax savings, right? You want to reduce your FICA taxes, and it also gives you more audit protection, right? Because the S-Corp requires a whole separate tax return from your personal. So that's one of the pros to it, right? The biggest cons is you must pay yourself payroll, right? You must run payroll. As a sole proprietor and single member LLC, you don't have to run payroll, right? Because you're going to get taxed on the net income no matter how much you pay yourself. But with an S-Corp, the rule is, if you're somebody here with an S-Corp, please pay attention. And I don't want you to jeopardize what you have, but the rule is with an S-Corp is you need and you must pay yourself a reasonable salary, right? A lot of us have S-Corps. We're not paying ourselves a salary. Well, if the IRS with their new 87,000 agents plan to audit you, guess what? You at risk. So if you have an S-Corp or you plan on forming one, you need to run payroll. And that just means pay yourself at least 25 to 30% of your net income every single quarter. I can elaborate on that soon, but you need to run payroll. It's more expensive tax fees, additional $500. And you also got to file your taxes a little bit earlier. But the biggest picture is this: not only can you save 15.3% in taxes today, but you can save 15.3% in taxes every year moving forward. And just to elaborate on that, right? This is just a quick example before I go to tax deductions, right? Similar example. You got a sole proprietor, LLC member in the S-Corp, both making $100,000. The LLC and the sole proprietor, you make $100,000. You don't have to pay yourself payroll. You get taxed on the net income regardless. Your self-employment tax in this case is $15,300. You have no say. That's your tax. You have to pay that, right? But with an S-Corp, slightly different. Yeah, you make $100,000, but now you get to pay yourself a payroll, like I said, reasonable salary, right? $30,000. But guess what? You don't pay FICA taxes on your net income with an S-Corp. You pay FICA taxes on your payroll. So instead of paying FICA taxes on $100,000, you only pay FICA taxes on this $30,000 here, right? And now your taxes is only $4,590. That's an instant tax savings of $10,710 instantly, just by converting your business. So this is super powerful. You only need one of these. I love to break that down to you, but I wanted to at least go over how to protect your wealth and how to get some tax savings throughout the process. So hopefully that was clear. I can answer questions at the end. Now, the next part, I'll quickly go over this slide because I'm pretty sure everybody here has heard of a write-off, a tax deduction, but I just want to put emphasis on 3 words. It's really 2, but I'm going to say 3. Anything that is ordinary and necessary, right? Ordinary and necessary. Those are 2 words to run and operate your business, right? And in your case, right, we mean the gas to get around, your professional dues, right? The staging costs, everything you need to operate your business, your cell phone, the car, all of that can be a tax deduction. And what that does is it reduces your total income, so it reduces your total tax liability. And I'll break that down in a second. But long story short, if it's something that you pay to pretty much make more money, or something you pay to grow your brand and perform your duty as a realtor, then you can write it off to reduce your tax liability. So that's something I kind of want to mention there. That's what a write-off is. So now I can email this guide to you, but I just kind of wanted to put a bunch of deductions out here that everybody in here should be eligible for, right? You got advertising, you got the Google ads that you pay, right? Health insurance, meals, client gifts, right? We got lock boxes, signs, business cards, real estate licenses, business conferences. Like this is a small list, but just think about all the stuff that we pay for on a daily basis. You can write that off as a tax deduction. So I can email you all this guide. It's customized just for you as realtors and investors. So I'll send this to you, but I wanted to hit on at least 3 of these to kind of put heavy emphasis on them. And the first one is real estate coaching. And I'm going to add education and books in there, right? So yeah, the reason why I love this is because the government basically incentivizes everybody here in this Zoom room to invest in yourself as a realtor, right? Because if you look at it this way, right? You go to some of these big universities, just use mine, University of Illinois, you pay about $35,000 a year. Over 4 years, it's $140K. I couldn't write off a single dollar that I spent on my tax returns for $140,000, right? Not a single dollar. But as a business owner, and remember what I said, the tax code is created for us as a business owner, right? Guess what? Anytime you invest in yourself, anytime you pay for a real estate coaching, right? You got different mentorship programs, masterminds, courses, ebooks, hardcover books. Anytime you invest in yourself or anything to help educate yourself, it is 100% tax deductible, meaning you can write it off in your tax returns, right? And this is powerful not only from a tax deduction standpoint, but imagine if Gary Keller or Grant Cardone or somebody that you really admire in your field had a mastermind or a course for $20,000, $15,000, $10,000, right? Not only can you learn how to maximize your growth and be a better realtor instantly because you learned it from the goat's mouth, not only can you become a better realtor, but now you get to lower your tax bill just because you invest in yourself. So just keep that in mind. Anytime you're investing in yourself, your brand, you can definitely write that off in your tax return. So keep track of those expenses. And lastly, the second one I want to go over is healthcare and retirement, right? And this is big because as a realtor, right, as an independent contractor, as a business owner in general, we lose out on a lot of the benefits that you would normally get in a typical corporate job, right? We don't get the 401k plan, right? We don't get the healthcare premiums paid by our employer. We don't get all that, right? So it kind of negatively impacts some of us because it's very expensive. But I want to tell you all, let's start thinking like business owners, right? Anytime you pay for any of these for yourself, healthcare and retirement, they are deductible for your business too as well. So kind of think of it that way. So start looking, put in your business name and start taking that tax deduction too, because we always want to make sure that we're protected no matter what you're doing. So I just want to reemphasize that healthcare and retirement is also a tax deduction. And one fancy thing about retirement, right, is yeah, we don't have the 401k plans, but hear me out, realtors, right? Not only are we in a better position to be successful, because now not only can we contribute up to $6,500 to an IRA, a Roth or a traditional IRA, but if you have a single member LLC, or if your spouse is your only other partner, you can set up a SEF IRA or a solo 401k and contribute up to $66,000 towards your retirement, right? 66,000, right? So not only is this a business deduction, not only does this reduces your taxable income, but now you get to build wealth a lot faster than a traditional 401k route. So just keep that in mind, right? You want to keep in mind that you can write off healthcare and retirement. So just look into that as soon as possible and ask me if you got questions. I can walk you through that. And then lastly, right, I highlighted accounting fees. And this is very important because, and this is why I wanted everybody to be in this room today, right? You can absolutely write off legal fees, accounting fees, anything associated with investing in yourself, because investing in a good accountant, investing in a good legal team for yourself is going to help your business. It's going to help scale and grow your business a lot faster, which is why it's a good investment, which is why it's a tax deduction. Because as I realized after interviewing realtors, right, everybody here, realtor, investor, right, you all are the quarterback of every transaction, right? You wear a lot of hats. You're leading the team, you're leading the client, you're doing everything from start to finish. But we all know that you could be the best quarterback in this room, the best quarterback in the league. And if you don't have a team, you won't win in the long run, right? Because nobody in here will go into a transaction without your team of inspectors, lenders, lawyers, title representatives. Like, you won't go into a transaction with a full team, right? So my question to you all, so why are we tackling our personal and our business finances without a team, right? Because the truth is, a lot of us, especially as realtors during peak season, right, we could become extremely busy and you tend to lose track of your personal and business finances, and I get it, right? But here's a downfall to it, right? And this is something I've seen a lot, and I've only been in the game for a couple years, right? What happens is you lose track of your finances. Now you fall behind on taxes. Right? I know it's probably, I'm not sure, but I know a lot of people fall behind on taxes in this situation, right? And now you're neglecting your budget because your income is inconsistent throughout the year. I fully understand that, but now you probably can't afford your expenses because you didn't budget correctly, right? And the saddest part is now you as the realtor, hear me out. You as the realtor now become ineligible to purchase your dream home because you don't have the appropriate financial statements. You don't have the appropriate tax returns to show that you have a profitable business, right? And that's a huge downfall, something I see, which is why I highly recommend everybody here, right? Not me, it can be literally anybody, but literally invest in a qualified tax professional, a qualified team for yourself and for your business to help you scale and grow your business a lot faster. And most importantly, teach you how to create a solid financial foundation so you can scale and grow your business. And so you're not stressing about finances. And so you can have more time to focus on what you enjoy doing most. So I just wanted to put that there. You can write off legal fees and accounting fees. And before I go into the last part of the presentation, I just want to go over some deductions that nobody here should miss, right? Every realtor in here qualifies for this, so I want nobody to miss it, even if you're using TurboTax, right? Number 1 and 2, so get those together. Your phone bill and internet, right? You need to be available at all times to check email. You need to be available for your clients, right? You need your phone and internet. Those are 100% deductible, right? You got meals. Everybody in here needs to eat. Anytime you eat with a person that's part of your business, you know, one of your partners, your spouse, anybody you meet with, a client, or you attend a conference and you eat, anytime you eat and you talk about business, at least one point throughout that conversation, that's a write-off, right? So one thing I want to emphasize is last year, 2021, 2022, meals were 100% deductible, right? If you ate $1,000 worth of meals, you can get a $1,000 deduction. Nice, right? It was to incentivize us to eat more at restaurants during the pandemic. But now in 2023, this upcoming year, meals are only 50% deductible. So if I eat $5,000 worth of meals for tax purposes, I'm only going to get a $2,500 deduction. So I wanted to point that out. That is one of the tax changes. Big picture is if you're eating, let's get in the habit of writing on those receipts, taking a picture, and then keeping track of every time we eat so we can get a deduction, right? And then the last one I'm going to spend a little time on is the rent. So rent, home office expenses, right? A lot of us do a lot of our paperwork from home. You know, my business is 100% virtual. And I know a lot of you as realtors, you also work from home too as well. So I want to put emphasis on the fact that you can write off your expenses associated with your home, right? So the way it works is you get the simplified method or the actual method. The simplified method allows you to take $5 per square foot of any area within your home that's exclusively used for business purposes, right? And we're not talking about the kitchen table. We're talking about a desk that you have in the living room or even a designated office space in your apartment or your home, and you can get $5 per square foot. That's the easy route, right? Or you can take the actual expense method, which you take the percentage of your home used for business purposes, and now you take that rate and you multiply that by all of your home expenses. So in this example, if your home is 1,000 square feet, right? Your office 250, that's a 25% rate. So now you get 25% of your mortgage, your rent if you're renting, your property taxes, you got utilities, repairs, so that's gas, lights, water, all of those expenses, you get to deduct 25% of them, but it's all based off the percentage of usage. So that's something I want to point out. And then car expenses, right? The truth is, a lot of us as realtors, right, we're not taking the Pace bus all the time or, you know, Ubering everywhere we go, right? Some of us have cars, right? Some of us have to meet up with clients all over the state or even in different states. We drive a lot. You all drive a lot. So I want to emphasize that you can write off the auto deductions, but it's two different ways, right? I don't want you to kind of get this mixed up. The same thing with home office. You got two options. So with car expenses, you have two options again, right? You take the mileage method, which is 62.5 cents per mile. That's last year, and I think it's 65.5 cents per mile this year, right? So you want to track your mileage. You get 65.5 cents per mile that you drive back and forth to meet with clients, back and forth to the supplies, or to the stores to get supplies or showings. Like every time you drive, that is a deduction, right? So you get that method, or you can take the actual method, which basically says, okay, let's take the percentage of your car used for business purposes. Let's take that rate and multiply by all your car-related expenses, right? Now we're talking about oil, that gas. I know gas is a huge expense, especially when the prices went up. So oil, gas, tires, repairs. And if you have a good qualified tax professional, right, we can teach you how to depreciate that entire cost of that car. Because either you can do it over 5 years, or if you purchased a car last year and it was over 6,000 pounds, you can even deduct almost up to the entire 100% of the purchase price, right? So just keep that in mind. You want to work with a qualified tax professional for these deductions because it kind of varies. Because one quick change, and I won't go too much in this for auto, right? A lot of us here, hey, you purchased a car, you can write off 100% of it. That's only true in 2022 if you purchased a truck or something over 6,000 pounds. But as we all know, the tax code changes, right? So now in 2023, if you purchase a car over 6,000 pounds, you can only deduct up to 80% of that purchase price in the first year, right? Next year, 60%, next year, 40%, next year, 20%. It keeps changing every single year. That is why you need to work with somebody who understands, because it's not your job to know everything. It's almost impossible. So just make sure you sit down with your qualified tax professional or check the right boxes on TurboTax to make sure you get the right deduction. So that's just the ones I wanted to hit on, fancy ones, Apple Watch, cameras for showings and different things, MacBooks to be available. Just think about it, y'all, with deductions. And last point on this, if it's ordinary and necessary for you to complete your role as a realtor, it's a tax deduction. So just keep that in mind, right? So lastly, what I want to go on, and if you want to take notes on this part, this is by far one of the most important parts of this presentation, right? And the reason why is because unlike the rest of society, right? And I wrote it here and I'll send this to you. We don't pay taxes automatically every 2 weeks like you would if you had a W-2, right? As realtors, as independent contractors, as business owners, it's our responsibilities to make quarterly tax payments. And quarterly, let's say it's 12 months in a year. Every 3 months, we need to get in the habit of making a tax payment to the IRS, right? So just keep that in mind. I know I mentioned earlier you need to have two accounts, right? But I kind of, understated a little bit. Everybody in here at the bare minimum needs to have at least 3 accounts. Because the way it works is, right, we need a business account, a personal account, and then we need a whole separate tax account, right? Because in order to make estimated tax payments, we need to save our money throughout the year to make those payments. So everybody here needs to get in the habit of saving 20 to 25% of your income every time you get paid and putting that in a separate tax account, right? Every time you get paid, 20, 25%, putting a whole separate account. So when it's time to make estimated tax payments, you will have those funds already put up to make the payment. Because this is what happens. And this is common all the time, right? I have people come up to me, especially realtors, and be like, Darian, I don't want to pay anything in taxes this year. And I'm like, okay, that's fine. All right. So I help them get every legal tax deduction in the book, right? And they don't have to pay taxes. But because they didn't make estimated tax payments, in order to not pay taxes, when you look at your tax return at the end, it's going to show, dang, yeah, you didn't pay taxes, but you only showed about $12,000 in income, right? So now when it's time for you as the realtor to apply to a mortgage to get a home by yourself, the lender's going to look at your tax return and they're going to notice that, hey, you do not have a profitable business. You don't even have money to afford this home. And y'all know how that works, right? So you don't want to be in that position. And the truth is, as you start making more money, right? Let's say you start making, let's just round it, $500,000, right? $1 million. Once you start making so much money, it's almost, I don't want to say impossible, but it becomes very difficult to have $1 million worth of expenses. So let's just start having good habits now that start saving money for our tax liability throughout the year and making payments throughout the year. I got the dates here at the bottom and I'll send you a link. But as realtors, your responsibility is to start making a tax payment every couple months. That's the easiest way to be able to show income. And then also to make sure that every, tax season, you're not dropping a huge chunk to the IRS because you already paid your taxes throughout the year. So that's just something to keep in mind. You want to make estimated tax payments. And I know I didn't really mention bookkeeping that much, so I'll quickly go into that. But the big thing about bookkeeping is, right, we want to get in the habit of tracking our expenses, right? IRS is hiring all those agents and they're coming for those of us, right? Yeah, some of us haven't reported our income. So they're coming for us, right? And then there's some of us who's reported income, but then we got a bunch of expenses to offset that. But then now if we were to ever get audited, we don't have any receipts to vouch for any of these transactions. That's why bookkeeping is important, because bookkeeping allows you to create financial statements, one that you need to show to lenders and just in general to track the performance of your business and to show that you have a profitable business. But it also, most importantly, helps you stay organized, right? So I highly recommend QuickBooks or Xero. You can link your business bank account to it. Every time you swipe your card, the transaction goes on QuickBooks and you just categorize. Like I went to McDonald's, that's meals. I went to Home Depot, supplies. Like it does all of the work for you, but you have to do it because you have to get in the habit of tracking your receipts. IRS states that you need to keep receipts for at least 3 years, people, at least 3. It's not like the old days when we need to put stuff in a garbage bag or a box. We can literally take a picture of the receipts, right on, hey, this was a meal with, let's say, Larry, right? This was a meal with Larry. We talked about real estate. I put that up in my iPhone, my photos, and that's how I'm tracking receipts. So we want to get in the habit of, one, tracking receipts to vouch for all our expenses, having a good bookkeeping system, and then it's going to allow us to estimate our taxes because we pay taxes on our net income, not the total amount of money to come in the door. So that was a little rant there, but I wanted to hit on that before I ended the presentation up for the Q&A. But the last slide I want to hit on, which is the final note, right? Let me get to that slide, right? This is essentially, why should you hire a CPA? And when I was thinking about why I would tell you all to hire a CPA, I thought about it. I sat down and I thought to myself, as somebody who's going to invest in real estate, so why should I hire a realtor, right? I'm personally going to hire a realtor to stay compliant, right? I'm going to hire a realtor to make one of my largest life expenses a smooth and easy process because you are the experts, right? I'm hiring a realtor to stress less. I'm hiring a realtor to ensure that the home I want to purchase has a solid foundation, right? Y'all want to point out the red flags for me, and y'all have a team of trusted professionals, which is going to make my life a lot easier, right? So after thinking about that, the same reason why I should hire a realtor is the same reason why each and every one of you needs a CPA or just a qualified tax professional on your team, right? You're going to help me stay compliant. I'm going to help you stay compliant, right? I'm going to teach you how to lower your tax bill. I'm going to help you stress less. And I'm going to say that again, but teach you how to lower your tax bill, because I know buying a home is one of your largest expenses in your lifetime. But let's just be real, people. If we keep paying 25 to 40% of our income in taxes every single year for the next 20, 30, 50, 60 years, that's by far going to be one of our most expensive expenses, right? So that's what we're going to do. We're going to help lower your tax bill. We're going to help you stress less. And most importantly, right? And this is because I care. We want to help you build a solid financial foundation, right? You need that, right? We need to stop getting in the habit of just spending money without tracking our finances. It's going to help you stress less about your finances and give you a peace of mind, because I know you all want to grow empire, and I know you want to be in the best position mentally to help your clients. So I highly recommend you all to seek help and to get somebody on your team to help you out. So enough with that. Biggest things, if you are somebody here with a partnership, right? You got a LLC set up with more than one member, you are considered a partnership. That tax return is due March 15th. So you got about 15 days. Same thing with an S-Corp. Tax return is due on the 15th. All of you other people with individual tax returns, single member LLCs, or sole proprietor, your tax return is due April 18th. So let's not wait until the last minute with it. And if you're behind on taxes, please reach out. I can definitely come up with a strategy for you to catch up. I just want to put those deadlines there. And lastly, I encourage you all to stay connected. Our firm does help with one-in, one-off tax returns. But the vision, right, is to work with a small group of people, right? A small group of realtors, small group of business owners in general. We want to do the bookkeeping for you. You don't have to worry about that. We do the payroll for you. We do the tax planning for you to help you make estimated tax payments. And we do the tax prep. One person take care of all your financial needs, and you don't have to go all over the place. So that's something we definitely can assist you with. And if anybody here ever have questions, you need a free consultation, or you just want to bounce ideas off somebody, I'm definitely here to help. And I would love to walk you through kind of your journey and help you build a solid financial foundation. So thank you all for your time. I'm gonna open the floor for Q&A, but definitely wanted to give you all this information. And yeah, please let me know how I can help. There you go. I think I stopped sharing my screen. Yeah, so I definitely would love to answer any questions. I see some in the chat, right? Is there a limit on client gifts or any of? So yeah, no limit on client gifts at all. Obviously, we don't want to be spending too much on client gifts, but if it's part of your model, you're spending $20, $30, $50, or even, a couple $100 on gifts, by all means, it is a tax deduction. So that's something to keep in mind. Any more questions? Got you. And then Israel, I know he's hosting a huge event for realtors next week. I don't know if you want to tell him a little bit about it, or I can if he's still on the line. Okay, assuming he's not on the line. He's hosting an event with should be almost 400 realtors in attendance on March 8th. I can send you information. Oh, there you go. It's right there. There you go. Hold on, I had you on mute.
Hey, thanks, Ariane, for that. So you guys hear me?
Yep.
Okay, great. Yeah, no, thanks for the quick spotlight. Yeah, next Wednesday, March 8th, we're hosting a huge realtor coaching seminar. We're bringing in two actually $100 million producers out of New York and Florida. They're going to come do a coaching seminar with us at the Carlisle Lombard. I'll put the link here if that's okay in the chat. Cool. Well, thanks again, Darian, man. Appreciate you, brother.
Yeah, no problem. No problem. I can send it out to him too as well. But yeah, like I said, I really just wanted to host this to work with a lot of realtors, and I see a common problem where a lot of us tend to fall behind on taxes. And I know taxes can be a scary situation, but if we plan the right way, like it's ways around it to legally never pay more than your fair share, most importantly. But the big picture is just to making sure that you have a foundation, and so you can grow your practice. So when you want to hire people or move on later down the road and start investing yourself, you'll have everything you need to make that a smooth process. So hopefully you all took something out of this. I'll send an email with a tax saving guide and some links for you all to stay connected. But yeah, I'm open for questions. I'll stick around for like 2 more minutes, but I want to thank everybody for their time. Yeah, I'll send everybody an update. Looks like nobody has questions. So thank you, everybody.